It's 12:02, so I'm going to go ahead and get started. Thank you guys for bearing with me on that. We had a little bit of technical difficulty before we started, so a little bit delay in letting you guys in there. But anyways, so glad you guys are here. Good afternoon, and thank you for joining us today on another Sage Investor webinar. This is Jen, and I'm a co-founder of the Sage Investing Group along with Maggie and Lana. If a question pops up during the course of the presentation, feel free to throw it into the chat box, or you can just hold on to them until the end of the presentation, and we'll open up the floor for questions. Now, today, the topic is know your syndication fees before you invest. As we all know that there are fees associated with any significant transactions, right? And multifamily syndications is, of course, no different. To be frank, I don't know if I would trust actually investing in anything, any investment that's free, that doesn't charge any sorts of fees. So I guess if you're going to be paying for fees, it's nice to know what these fees are and how they affect you and your investment partners. So that's why we're here today to talk about this. And luckily, actually, multifamily syndications, I feel like the fees in the syndications are quite straightforward and pretty easy to understand. The sponsorship team should typically be pretty transparent about what they are. It's actually supposed to be disclosed. They are disclosed in the private placement memorandum, so you can easily find them there if the team doesn't mention them during the webinar. And the other good thing about syndication fees is that there aren't really a million different types of fees out there. There are really about 7 different types of fees, and some of these 7 fees are more common than others. So we will go through that in a little bit. Now, before we dive into this webinar about syndication fees, let me just tell you a little bit about the Sage team for those who are new and who don't know us as well. In short, the Sage team, we are a group of auditors who love and are very passionate about real estate. So all 3 of us, we have a Big 4 accounting background, which means that our professional background is rooted in audit and risk management. So auditors, for those who don't know, are typically detailed-oriented, skeptical individuals who like to identify risks. And really, so that identifies what could possibly go wrong in any given scenario. And more importantly, we like to address how those risks can be mitigated. So then taking that professional background that we have in audit and risk management and combine that with our 35 years of experience in the audit, accounting, and finance, along with our thousands of hours that we've spent thus far underwriting multifamily deals, we apply our skills to what we do today in multifamily syndications. And that is, we critically vet deals so that busy professionals or business owners like you guys can invest with greater confidence in our syndications. So today, the Sage team, we have over 250 verified members in our Sage Investor Circle, and we have over 530 Facebook followers. And collectively, we have participated in 15 multifamily syndication deals, which totals over 4,500 multifamily units with a portfolio value of $497 million. We are really excited to actually be adding another asset to our portfolio with a closing that's happening next week. So evidently, we believe that multifamily is one of the best asset classes that's out there to invest in. And we created this webinar to really help educate you guys, provide the educational content for you guys so that you can decide for yourself if this is a type of, this investment is the right strategy for you as well. So this webinar is really for anyone who's ever tried to invest in syndications before, but ended up backing out, or you've invested in syndications, but you feel like you didn't know enough about what you were doing. Or thirdly, maybe you felt overwhelmed by all the information that's out there. So this is why we put out this bite-sized educational content for you on a bi-weekly basis so you guys can learn slowly over time. And so this is really a great place to learn and just continue building on that knowledge so that you are prepared for that next opportunity when it comes up. And now, before we just dive in, one more little thing. I have to make a disclaimer that this webinar is for your education only. And although we all have a CPA background, Sage is not a legal, financial, or tax advisory firm. So please consult with those respective professionals for legal, financial, or tax-related questions. And please know that if we mention any sort of returns on our webinars, these returns are, of course, not guaranteed. We can't guarantee any returns. Now that we got the introduction and the disclaimer out of the way, let's dive in. We hope that after today's webinar, you'll walk away having a better understanding of why do you need to be aware of and understand what syndication fees are. What are the 7 types of syndication fees that are out there? How to find or how to know what syndication fees are being charged on the particular syndication that you're considering. And a big question that investors ask us a lot of is, are returns net of fees? And before we get into all of this, here is a little tip that we want to share with you about syndication fees. And that is, it's really quite rare for a syndication to have more than 4 fees. So be sure to count them. We typically see about 2 or 3 on our deals. And feel free to ask the sponsorship team any questions if you ever are wondering what the additional fees are for. So number 1, let's jump in by answering that why question first. So why do investors need to be aware of and understand sponsorship fees, which are really the fees that compensate the sponsorship team in one way or another and we'll get into that in a little bit. So it's important because you really want to look for an alignment of interest between the investment and the goals of the sponsorship team, as well as you as the limited partner. Does the sponsor make money, for example, if the investment doesn't do well? I personally don't like investments in that type of situation because it's really there's really no incentive for the sponsor to go above and beyond to make the asset perform. So as we go over each type of investment fees in the upcoming slides, we'll help you understand what these fees are and how they may align your interests along with the sponsorship teams. And secondly, you just want to make sure that the fees that are being charged to you are reasonable in the number of fees and also in the amount, so that at the end of the day, it's not going to eat up all your returns that your money is earning. So we're going to share the range of fees that we see on syndications and then what we think is reasonable. Now, there are 7 types of fees, as I mentioned earlier, that you'll generally see in syndications. And we've broken down this list of 7 fees into 2 different buckets. One, which is more common fees that we typically see, and they are acquisition fees, asset management fees, refinance fees, and the disposition fee. And this remaining bucket here are fees that we do see on some syndications, but they are less common. And they are such as the construction management fee, loan fee, and guarantor fee. We're going to go and look into each one of these in more detail, like I said, just so that you guys can learn why each fee is being charged and what the fee ranges are for each and what is a reasonable number to see for each of these. So first of all, the acquisition fee. This is the fee that compensates the syndication team for their time, their expertise, and their effort in securing the investment opportunities. In many cases, it does take sponsors many months of researching and underwriting deal after deal, as Maggie and Lana can tell you, just to find the one that works. So imagine, however, after finding a deal, there are actually more steps that are involved for the sponsorship team to take the deal from the start to the finish line. So in between all of this, we have to obtain the financing. We have to work with mortgage brokers to obtain the financing. We got to work with our legal counsel to create the syndication structure. And we also have to work with other partners to pull together the limited investors in the deal as well. So a range that we have seen for the acquisition fee on deals is from 1 to 5% of the asset purchase price. So what we typically charge and what we think is reasonable for this acquisition fee is more like in the range of 2 to 3%. Sometimes maybe a sponsorship team may charge more because maybe the deal size is a little bit smaller. So just to justify for all the work that they put into pulling together the deal, they may charge maybe a 5%. But on all of our deals, 2 to 3% is what we typically go for. And another way of calling this acquisition fee is due diligence fees or upfront fees or sponsor fees. So these all mean the same thing. And next is the asset management fee. The asset management fee is really the compensation to the sponsorship team during the hold period of the investment for the effort and for the time that it takes to oversee the entire operation of the company. And these responsibilities include managing the work of the property management company, which is usually a third party, to ensure that the property is running optimally and to make sure that the renovations are done within budget and on time. And the asset management is also responsible for handling all the other financial, tax, legal, entity management of all things asset related. So it is actually a lot of work, and actually that includes the handling of the investor communication that the investors get on a monthly basis, and also as calculating those distributions and making sure that the distributions go out to the investors. So as any experienced asset manager will tell you, asset management is not an easy job. The range of compensation we typically see here is 1 to 3% of the property's actual monthly gross income. That's typically what we charge on our syndications, based on the monthly gross income. I know that there are some syndicators who may charge on the gross potential income. And to me, this is not really a good alignment of interest between the investor and the sponsor or the asset manager, because the gross potential income is really I guess like the income that the property could be charging for all of their available units, regardless of whether those units pay or not. So you can see why that's kind of a funny number to charge your asset management fee, right? Because you want the asset management to work hard to fill up your property with good tenants that pay, and their compensation should be based on who actually pays, on what is collected versus what could be collected. So make sure that you kind of pay attention to this and how that is calculated between syndicators. So refinance fee. The refinance fee is a fee that compensates the sponsor for their time and the energy required to refinance a property. In a value add asset, which is typically the asset that we work on, it is typically the asset that we acquire. It is typical, right, to pull out the equity out of the property once it is renovated. And the sponsors have forced the asset to appreciate on top of any market appreciation. So at this point in time, the sponsor really works to apply for a new loan in order to pull out this equity and return to the investor some of the capital that they initially invested. So it returns some of the capital back to the investors. So as you can imagine, doing a refinance takes just as much time as it takes to apply for a new loan. It does take additional effort beyond the day-to-day asset management that goes on at the property. And so sometimes sponsors will charge a fee for this refinancing. And that fee is typically 1 to 2% of the total refinance loan amount. And that's a reasonable range. Another name for it is capital event fee. So if you see capital event fee, it could mean a refinance or disposition fee, which we'll cover next. So disposition fee is a compensation that is charged to cover the marketing costs and to pay the critical players of the sponsorship team for the work that's involved in selling the asset once the business plan has been executed. And as you know, there's a lot of work that's involved to ensure that there's a smooth transition from one ownership to the next. And this includes, after the sale, wrapping up all of the loose ends at the property, which includes like paying out all the outstanding invoices, just settling anything that's outstanding at the property, and then determining what the returns are to the investors, and then finally getting those out and closing out the deal. So typically, this disposition fee is 1 to 2% of the total sales price of the property once we exit. And this could also be a capital event fee, as I mentioned earlier. So now some of the more, so starting from here, these are the less common fees that we see. We have come across them, but not as frequently as the other four that we just presented on, So the first one is this construction management fee. And this fee is usually something that may be charged on some value add or development projects. And it is really to pay the sponsor for managing the property's renovation. Being attentive and thorough when you're overseeing the renovation project is really important to ensure that the construction project finishes on time and within budget. And so sometimes for value add projects, which is a lot more time consuming than a lighter value add, a sponsorship may add on this construction fee because it takes a huge amount of time out of their time out of the daily asset management. So this is a separate fee that goes on top of that. And a range that we see here is typically like 5 to 10% of the total construction budget. Now, the loan fee, this is the fee that compensates the sponsor for the work that they do towards obtaining the financing for an asset. Because getting a large commercial loan does take an immense amount of effort, similar to if you ever buy your own house or if you ever bought your own single family residential property as an investment. It does take quite a lot of work to fill out any sort of loan applications. And so in this situation, the sponsor has to fill out the loan application. We have to create bios for all of the sponsorship team members and create org charts to show who is on the deal, as well as prepare and present their personal financial statements. So there's a lot of work that goes into here, and some sponsors will charge a fee ranging from 1 to 2% of the total loan amount. And to us, that's pretty reasonable if they do charge that. And finally, the guarantor fee. So some syndications, they may charge a guarantor fee, which is a compensation to what we call the key principal on the general partnership team or on the sponsorship team. And this is a person or persons who has sufficient net worth to help us guarantee the loan by pledging assets, right, to secure the loan in order for us to get through the transaction. So this is a critical component of the loan, and sometimes there may be a guarantor fee that's charged for this, and that is typically 1 to 2% of the total loan amount. So now you probably want to know, of all these 7 fees, how do you know which ones you are paying for when you invest in a syndication? So I'll show you really quickly some private placement. This stands for private placement memorandum, and these are excerpts from 2 that kind of shows them in different ways. So all the fees should be disclosed in the PPM. So if the sponsorship team doesn't mention it on the webinar or is not shown in the webinar deck, the sure place to find them is in the PPM. So then depending on the sponsorship team, the section that they're disclosed under may differ. On most of our offerings where we partner with Think Multifamily, I do see the fees being disclosed under this summary of the offering section. And you can see here, I highlighted the fees that are relevant to us. So here's the management fee, and then another fee, they talk about the one-time property acquisition fee, which we mentioned. And then this is another excerpt from another operator. And here, the fees are shown in its own section, fees and profits to be received by the manager. So it's not too long and it's pretty straightforward. But if you can just do a search for fees, you can usually find them within the PPMs typically. But that's just to give you an idea of where you can find those. And lastly, as investors, you should always know whether your investment returns are net of fees. Obviously, it makes a huge difference whether your returns are shown gross of fees or net of fees. And so I just want to show you that, the pro formas, such as this table that Sage presents to our investors and that most syndicators present, they are presented based on all these, they are based net of fees. So what you see here with these cash on cash returns, the total cash on cash returns, the total returns, the IRR, all of these are shown net of fees. And like I mentioned, this is pretty typical for most syndications, but just ask the sponsors just to be sure. And some investors, I know that they like to compare returns as well to other investments just to weigh out their options when it comes to investing. Do they want to put $50,000 in the stocks or do something, or they want to invest in multifamily, right? And so just want to make sure that you guys are comparing apples to apples when you do that comparison, since not all investments are as transparent and not all of them show the returns net of fees. So I don't know if that seemed like a lot of information. So here's a few takeaways for you guys. If nothing else, I hope you guys take away these few things. And first one is that fees aren't always bad, right? When they are used reasonably to align the investors and the sponsors' interests. And number two is that although there are 7 types of fees, some of them are more common than others. And typically, you should not see more than 4 fees on a syndication. And number 3 is that to know what all the fees that you're paying are, check the private placement memorandum for those fee disclosures. And lastly, when comparing returns, make sure you're comparing apple to apple and compare based net of fees. So that wraps up our webinar on the syndication fees. And if you guys have any questions, please feel free to unmute yourself and you can ask, or you can type into our chat box. And I know usually it takes people like a few minutes to come up with some questions. So while I wait for these questions to come in, just want to say that if you found this webinar to be helpful and you know of someone who might also be interested in learning more about investing in multifamily syndications, we'd be happy to help those who you care about. So to do that, you can refer them to our sageinvesting.com website. And you can click on the Join Now button, fill out a questionnaire, and most importantly, set up a call with us so that we can connect and get to know you better and just to see if what we have to offer is right for you guys. So here's our website, and you can easily find us as well. You can, I think all of you, I don't know. Anyways, I don't really know who's on the webinar, but if you want to connect with us directly, you can also email us at info@sageinvestinggroup.com. I'm going to add it to this slide for the future webinars, but info@sageinvestinggroup.com if you guys want to reach out directly. So going back to the questions, does anyone have any questions on the syndication fees? Okay, Lana and Maggie, can you guys say something just to make sure that my speaker is working? Because earlier it wasn't working, so I want to make sure I'm not ignoring anyone.
Hey, Jen. Can you hear us?
Yeah, I don't have any questions.
Yeah, question.
Okay, perfect. Well, hopefully that was pretty straightforward and comprehensive. Like I said, I think syndication fees aren't really too complicated, but it is just good to know what they are and what you're paying for. So, well, if nobody else has any questions, you can always reach out to us after the webinar is over and just email them to us and we'll get back to you. And also we are going to be sending a replay of this webinar to you guys afterwards, later on today as well. So you can share it or you can watch it again, whatever you would like. But thank you so much. We really appreciate you guys and your time for joining us. And I'm so happy that we made it within 30 minutes. Thank you so much. We'll see you guys soon, hopefully on the next webinar. Have a great rest of the day. Bye, guys.